TheoTrade. This is Don Kaufman. It's January 8th, 2020, and you are watching the TheoTrade evening video. There's 10 minutes left inside of the trading session, and I got to tell you, buying just hitting a fever pitch inside of today's trading session. And one of the reasons I'm recording right now, while the market still has 10 minutes left in this session, is that fever pitch may be coming to an end. Listen, throughout the course of the evening, throughout the course of the trading session, the buyers stepped in over and above all of the geopolitical risks, which they just said, that's it. The geopolitical risks have subsided. People were trading just shy of 100-point range inside of the S&P futures, including overnight trade. If you're taking a look at the SPX also had a fairly magnificent range, again, when you start looking at 30, 40-point moves in the S&Ps on an intraday basis, I mean, that was the expected move for the entire trading week. Nevertheless, you can kind of feel, if you will, that buying, when I say it's hitting a fever pitch, however, at the exact same time, there are elements, of stability in this marketplace that are clearly lacking. And I'm going to display those to you. And once again, I don't want that to be an overwhelming, bearish connotation for the marketplace. Let me show you precisely, some of the aspects that I really see inside of today's trading. First of all, I've got to go back over to the daily chart just so you can see, that range is real. We actually tagged all the way down to 31.80 in the overnight trade, as high as 32.67, and we did it on size. All right, so there's going to be north of 2 million contracts that are going to trade in the S&Ps, but hey, we traded almost 1 million contracts before the marketplace even opened today. Now, as I said, that buying kind of felt like it was hitting a fever pitch. Listen, the buy side activity, in the trading session today, and that last leg to the upside here was actually met with some huge algorithmic spikes, in terms of volume. Those are huge and standouts because in a marketplace that's just grinding a little higher like we have been throughout the course of the trading session, you don't expect to see algo's gone awry and hitting 5,000-6,000 contracts in a minute. Nevertheless, as we come closer to the closing bell, as I said, there are these elements of stability that are just lacking inside of the broader market. One of the first things that I want to bring to your attention, and I find this very unusual, if we take a look at our average, if you will, kind of rip your face off rally, we would see correlation, and we're nowhere near it today. Now, this is something that you may or may not necessarily be familiar with, but I often discuss correlation, and I discuss correlation in relation specifically, to the S&P 100. And what I often look for inside of the S&P 100 here is typically, to say it's correlated, you got to have 87 products to the upside here, It lacks, and there's some really key underlyings that have not participated in the buy side activity. And what that effectively does is it would literally kind of undermine the markets, and they can fall back rather quickly. Now, I could point out Boeing all day long, but this is a news-related event in Boeing, right? So you could say, it's an odd stock out, Well, you've also got Walmart. You've actually got some of the energy complex, which happens to be down. Now, there's no necessarily surprise of it there, right? And then you start looking at things like Amazon. And Amazon, and one of the reasons I wanted to film this right towards the end of the close, Amazon feeling like it's getting an all-out sell-side activity blitz into today's close. Again, there's that element, if you will, of instability. Now, I also want to bring up some of the volatility, because the volatility, listen, the S&Ps, they were down, and they were down 50 points in the overnight trade. And here we are with the S&Ps up 20, and the VIX, is basically flat on the day, right? And look, it's come up substantially. Again, one of the reasons that I wanted to hit before the market actually closed over here is to show you, while I'm actually recording this, volatility is coming up. I mean, you don't expect volatility futures, okay, to be down a negligible amount. I mean, the vol futures are down some 35 cents. The VIX is basically flat on the day, all right? The bonds, they're starting to actually kick back into some rally action. We're not seeing correlation in the marketplace. If you take a look at the VVIX is the volatility index. That thing just bid from what? 86 like half and shot all the way. It's going to hit 90 here momentarily. Does this feel okay like it's a marketplace just tearing to the upside? Last but definitely not least, sell side activity starting to actually permeate into the XLF. Now, when I talk about degrees of stability or instability, you have to look at the financials, because the financials, they run this show. They run this show. The S&Ps would not be rallying, okay, without those financials over here. And more importantly, I want to bring up this auto expected move and kind of zoom in on it, because what you're going to see is that week over week, did you know that the financials, okay, are slightly down, right, on the week? Again, this line, this central line right here, this is the upper edge of the expected move, the lower edge of the expected move, the central line right there, okay? That is where the week began. We are down by just a few pennies, okay, in a marketplace, again, that is hitting effectively an all-time high. However, if you take a look at the marketplace, oh, it almost tagged the upper edge of the expected move, specifically inside of the spiders. But net, you hit an all-time high, and we're coming off of it right now, okay, with volatility starting to increase. And that, people, is why I wanted to hit right upon, okay, into the market close, that some of that buying really hit a fever pitch. And you start, and I was mentioning this the other day in one of the videos as well, okay, you start to feel like the markets, I mean, you've seen some pretty big risk thrown our way. They're impervious to everything until they're not, okay? And this is not a time, all right, to denote that I'm going to be bullish or I'm going to be bearish in here. And as I said, I don't want there to be a big bearish overtone. I am going to tell you this. If you're bullish on markets right now, okay, the risk reward warrants, okay, that you take incredibly low risk positions to be bullish. How are you going to do that? You got to use things like ratio back spreads to the upside. You got to use like defined risk trades, anything, okay, to stave off the idea that this marketplace could be just an overbought disaster. Now, if you're bearish, well, the thing that you have to actually be concerned with is it's a never-ending grind to the upside. So if you're going to be bearish, you want to take measured shots, cheap shots, if you will, to the downside. Things, again, like risk twist spreads, or like the hedge that I showed you on Monday. That was timely, wasn't it? On the Monday night video, I actually talked specifically about an SPY hedge, right, that you could go out, you could buy that hedge out of the money, and for the next 30 days, protect yourself effectively to the downside, or to take that downside shot. Strategy, people. At this point in the business, it's everything. Why? Because just in the last few minutes since I've actually been recording this, the S&Ps, which have been seemingly unstoppable, fever pitch, have just sold off, okay, from roughly what? 32.64 all the way down, okay, to 32.52. Again, got a fever pitch going on inside of the marketplace. Look towards the volatility. Know what strategy that you're going to deploy in this marketplace. That is first and foremost. Last, but definitely not least, anticipate quite a bit more volatility throughout the course and the rest of this trading week. Listen, on the trading week, the upper edge of the expected move inside of the SPX about 32.78. The lower edge is 31.90. Now, we can make an argument that that lower edge of the expected move has already been hit, because technically speaking, those S&Ps, they hit it in the overnight session, okay? Nevertheless, there is huge room still for movement the remainder of this week. We're also going to get jobs numbers that are going to start to surface, of course, on Friday morning. More importantly, we've got a lot of earnings that are going to start to hit next week, okay? And that's where it's going to be. The proof, it's going to be in the pudding. Again, elements of stability are lacking, okay, in today's rally. Volatility is slightly elevated. Correlation is not there. And yet, you still have that buying hitting that fever pitch. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.